Hello, investors. It's Don Vandenbord, Chief Investment Manager with Revere Asset Management. Today is Monday, November 18th, 5:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Check the trend gauge over here. We've got the coveted four green arrows. The only fly in the ointment, the NASDAQ 100 uh, closed Friday below its 21-day moving average. That's our short-term trend indicator. Poked its head back above it today, closed basically right on it. Uh, we need to see it get up and off there to get a little bit more uh, confidence in a bottom being put in after this pullback that we've seen since the election rally. So we've got the coveted green arrow for market leadership acting well today, and most leaders had a good day. A couple of pullbacks, but for the most part, acting just fine. And all the major indexes are trending above their 50-day medium-term moving average and the long-term 200-day moving average. So what happened today? Well, let's step back to last week, Thursday and Friday. Thursday afternoon, Jay Powell in a speech said they were not in a hurry to raise rates. The market reacted negatively to that and then followed through with a gap down Friday morning and more downside pressure. But we pulled back right to where we needed to hold, and that was the 21-day moving average, except for the NASDAQ 100, as I mentioned, a little bit below there, but that was because of some bigger pullbacks in some of the big eight type names. But we held there. And then, of course, we want to see that low from Friday hold, and we did. We had inside days for four of the five major indexes, only the Dow making a lower low, and support showing up and holding at the 21-day moving average across those indexes. Also, saw, as I said, bounce in leadership names. A lot of them got extremely oversold. One testament is that for how oversold they were is that 19 of the 21 over 21 uh, staying on the list from last week. So a couple of earnings weaknesses got names off of that list, but there is a massive supply of names that could have taken their place. And we do take our cue from the indexes and the leading stocks. And right now, this is just a normal pullback after a strong move up after the election. So here are the numbers on the day. The 21 over 21 list up an average of 1.95%, 13 up, one neutral, seven down. The big eight, led by Tesla, up an average of 1.24%. The RG8 up, this is our eight growth ETF composite, up 0.82%. S&P 500 opened about flat, rallied in the morning, pulled back early afternoon, went sideways into the close, up 0.4%. Same return for equal weight S&P. NASDAQ 100 up 0.69%, a little better for equal weight. The Dow, the only negative index on the day, down 0.13%. Mid caps up 0.19. Russell 2000 small caps up 0.1. Global diversified 60/40 stock and bond up a third of a percent. Our flagship GROTECTION portfolio, good day for the good guys, up 0.9%. We'll take a look at the charts and the holdings when we get into the chart section. For now, let's get into the indexes. And I'm going to bring up a 60-minute because we're going to talk about the keys for tomorrow as well. So there's your earnings gap, or not your earnings. There's your market gap up after the election, followed through. That was last Wednesday, followed through on Thursday and Friday. Started to go sideways a little bit. And then the gap down on Friday after we pierced this 59.50 level on late Thursday afternoon with Jay Powell's hawkish comments. Follow through to the downside, but we held 58.50, which is right around this big area that we broke above. This is the big October, late October area where we put in some resistance there, pulled back after that level, and then gapped above it. So This is a classic case of what was resistance turning into support on the pullback, but it also makes it a very critical area to hold. So this 58.50 to 59.50 range is what we'll be keying on for tomorrow. Very similar on the NASDAQ 100, except we're using the 495 level, which is Friday's low, and the 510 level, which is where we broke down from late Thursday afternoon and then following to the downside on Friday. So very similar setup to the NASDAQ or to the S&P 500. The only difference is we did close below the 21-day moving average on Friday, got right back and closed on it. Poked our head above it uh, early or late morning, mild pullback on it, closing right around that 500 level. Which also, as I said, corresponds to where the top was late October. And then if you look a little further to the left, that's where we topped in late July as well. That's the NASDAQ 100. Let's go to the Dow Jones Industrial Average. Hasn't touched the 21. So from that standpoint, it's showing relative strength. You can see that line trending higher over the past 3 weeks from a relative strength standpoint there. Did make a lower low today, so one minor negative there, but all in all, this of course looks fine as well. Let's go to the mid cap S&P 400, pulled down to the 3,200 breakout level. Found support right at the 21 and an inside day. Inside day means you made a lower high and a lower low relative to the day before's training. So basically what this is saying is, okay, we've stopped going down now. Can this bottom hold? And we will be keying on this 21-day moving average for the mid and small cap as well. Let's go to the Russell 2000 small cap index. Same situation, 2,300 breakout area, pulled back to it, held it on Friday, inside day, although it closed at the low end of the range today, but closed right on it as well. So we'll certainly be keeping an eye on that. And the equal weight S&P 500, the RSP, held at the 21-day moving average on Friday and an inside day there as well. So really we're looking at a pinch for these indexes below the declining 21, below the declining 8-day moving average. That's the purple line, the ultra short term indicator that we use. And holding on the bottom, the uptrending 21-day moving average. Bulls, of course, want to see the lows of the last 2 days hold right near the 21, recapture the 8 EMA, and make an attempt at higher highs. The bears will be looking to break through the 21 and test the uptrending 50-day moving average, such as we did back in the last week in October and early November. So there's the major indexes. Let's go next to the VIX, and it popped higher on Friday with the sell-off. Inside day on the VIX as well, and also below that 16 level, which is what we want to see. Below 16 implies a 16, right at 16 implies a 1% S&P 500 range, and that's exactly where the 21-day moving average on the S&P 500, the ATR, is right at 1%. We'd like to see it there or below. Go to the dollar. Let me show you why the dollar is so important. Look at back here in late September, the dollar was pulling back, and then extreme strength kicking in the dollar, taking it from 100 up to 107. Let's look at back at the S&P 500 then. So here we were late September, and very obviously we've made higher highs since that. But let's take a look at the international ACWX. We use ACWI as our 60/40 indicator. That stands for all country world. I means including the US. ACWX excludes the US. The US is about 60% of the world ACWI, of the total world index. Look how terrible this looks. This tells me that, first of all, if you're quote unquote diversified, like a pie chart advisor would have you in international stocks forever, we've been talking for years about how this is actually an example of diworsification, meaning diversifying into it's like going to the store shopping and buying rotten vegetables to maintain a balanced diet. There's no reason to do it if you can read a chart and read relative strength. Look how its relative strength is so far below um, where it was back when we put in the bottom the last time. Just massive underperformance by international stocks, and it is tied to the currency, and that's why we show the dollar every day. It does have an impact on the market. This interasset correlation part of the videos is not something that should be ignored. Although they're secondary indicators, when you stack up a bunch of secondary indicators, either in favor or against, the primary indicators are eventually going to catch up to those. So there's ACWX. That's all country world, excluding the US. In other words, international names. And that just is a terrible looking chart. So, okay, we showed the dollar. And after we show the dollar, we always go to precious metals. Well, the dollar did pull back today. Let's go back to that chart very quickly because I don't want to gloss over that. The dollar, after streaking higher, did pull back today. That's a pretty big down move, actually, 0.47%. Normally an inverse correlation with gold, and it has been certainly over the last 3 weeks. Gold popping higher on the weak dollar. Gold had been selling off. GDX also popping higher. That also had been selling off over the last 3 weeks. And silver, SLV, same situation. So they all popped up with a weak dollar, which is what the normal correlation is. Let's go to Bitcoin. Not correlated to the dollar, continuing to hang around about around all-time highs, basically closing flat today. This just represents the trading during of Bitcoin during the normal trading day. Of course, it does trade 24 hours. So that's Bitcoin. Let's go on to bonds. Here's the broad bond index inside day here as well, barely higher. TLT, the long bond, also looks pretty much like an inside day. And then let's look at the yields. If the price is down, sorry, if the price is up, the yields are going to be slightly down. So they did make a higher high before pulling back. Still riding the 8 EMA higher and really in a multi-level consolidation here over the last 3 weeks. Stock bulls want to see these rates start to pull back and break below this green line, which has been the 21-day moving average. We'll go to the 10-year as well, inside day pulling back. That's our tail of the tape. Actually, that's not our tail of the tape. That is our interasset correlation. This is the tail of the tape. So the stochastics not favorable as we're pulling back from overbought both on the major indexes and also on our RG8. NASI, that's the McClellan Summation Index. That's also trending lower. That's a bit of a headwind. Dollar going higher, also a headwind. That's why they're all in red. Sideways on the yield, and we're going to start tracking the percent of stocks against the 5-day moving average. This got very extended right after the election and got to an extreme, and we pulled back. Well, over the last couple of days, it got not quite to an extreme, but near the levels where you see some bottoms put in. So we've got a nice green arrow there. So we'll continue to track that going forward, percent of stocks against the 5-day moving average. VIX back below 16, as I mentioned. Fear and greed were on neutral. From a news standpoint, the market's really looking forward to NVIDIA, which has earnings after hours on Wednesday. Is will certainly going to impact multiple areas of the AI world and quite a few other stocks as well. He's coming into today, S&P 500 against what was support, that 5950 level, but it broke. Now it's resistance, and we're still below that level. Same thing with the NASDAQ 100 relative to 510. And when we get down to the keys for tomorrow, as I mentioned, we're going to expand those to include the top and the bottom of the range and also mid and small caps against the 21-day moving average. Day count after down 1 day consolidation with the inside day, but second day below the 8-day moving average. First day back above the 21-day moving average, but the slope is still flat. We need to see further progress off the 21, turn that slope of the line back up. Expectations remain positive as long as we're above the 21 on the S&P, right on the 21 at the NASDAQ 100. As far as sectors go, 10 out of 11 of the spider sectors higher today. Obviously, that's a positive. Semiconductors, oil, and oils led. Gold, silver, and gold and silver stocks with a bounce. Uranium strong as well. To the downside, industrials and transports. Portfolio, with the reclaim of the 21-day moving average, that gave us a great low risk entry to add an SSO position back on and get our leveraged index exposure up to a 0.8, which is we want to be at least a 0.6 if we're above the 50-day and the 21-day. Like to be closer to 0.8. Right when you recapture the 21, it's a good risk reward. So we bought 10% SSO on that. And then we added to Tesla with the news over the weekend that the incoming Trump administration was going to start putting together some or easing the restrictions on um, driverless cars and self-driving cars. So Tesla popped on that news. We added back to it. Want to point out, Mike, Market Surge, our primary charting platform. We used to have to calculate the average true range of the S&P and the individual names with an extract, but they added fields. They added a 21-day, a 30-day, and a 50-day average true range for every ticker in there. And we incorporated that over the weekend into our value Revere our RVAB calculation, and it changed Friday under the old calculation. We closed at 133. With the new calculation, it just ticked up a bit to 139. So it's not a major change as far as exposure and risk goes, but it's more accurate. The lower the time frame, the better. In this case, we're changing from 30 days down to 21 days. The standard is actually 14 days. I put in a request that they add that. I don't know if we'll get it or not, but with the buy of the SSO and the add to Tesla, our volatility adjusted beta ticking up from 1.39 to 1.66. Bottom line on the day, inside day for 4 out of the 5 indexes, also supported at the 21-day. I mentioned the keys for tomorrow. We need to, where are we versus the range? 58.50 to 59.50, very key on the S&P, 495 to 510 for the NASDAQ 100. Mid and small caps need to hold their 21-day moving average. That's the tail of the tape. Let's get into some charts and the revised 21 over 21 list. Just 2 names added this week, both names that we own, buying Tesla last week, and ERX, an energy, leveraged energy play, as energy stocks have been improving. So only 2 changes, Kava and cart kicked out from last week. So here is the 21-21 list for this week, sorted by price percent change on the day today. So the strongest first, weakest last. We'll start off with SMR. And I also want to point out here, right down here, 21-day exponential moving average. And this is a very important indicator to us. Obviously, we incorporate it into our volatility adjusted beta calculation. But now that it's displayed there plain as day, you can see if you're taking a position in something like SMR, it has a 12.33 percent average true range. Compare that to the S&P 500, which is a 1.00. So you buy an SMR, you got 12 times the volatility of the S&P 500. This is why we created this, to try to get the right size we want to be in, but not have too big a position that we're going to get shake out, because there's nothing worse than a sold out bull, as William O'Neill said. So we're not taking cowboy positions here. We're taking reasonable positions to get reasonable gains when the market is in our favor. But we certainly will control the position size based on the ATR. Also, remember, if something is green flagged here, it means we own it in our flagship GROTECTION portfolio. So SMR, no, we do not own that. MicroStrategy, we do own it. 10% ATR. That's why we've got a small size on it. But this continues to be just a massive market leader, up another 13% today. Here's Tesla with the gap up, closing mid-range. A-Lab, we also own this, 7.4% 21-day ATR, 3% size, 3.5% size. We have on this after a lower volume pullback. Volume came into it today. Nice day for A-Lab. Reddit, 7.46%. 21-day ATR. You can read it. I'm going to not stop quoting those. But we do own this as well, forming a nice little flag here up near the highs. Dell, we got stopped on a piece of this with the break of the 8-day moving average. But the other piece held the 21, and we were rewarded with a gap up on that today. That has earnings in a week. Here's the energy play ERX that we got into last week. Note the relative strength on energy and making a recent higher high on that as well. Dutch Brothers, after a nice 3-day consolidation, a little bit of volume came in and it poked its head above the lows of that consolidation. This is looking really good, and we're looking to add to this on any opportunity that we get. Celestica, big day up, but then a negative reversal. Still looks fine though, of course. VRT, gapped up, reversed, bounced at the 8-day moving average. Good looking consolidation there. Carvana, hanging at the 8-day moving average. LNG, acting extremely well. Looking for an opportunity to get into this, not really presented with a low risk one, but we do have the ERX. As I mentioned, Deckers, tight consolidation near the top of this cup base. Bitcoin, Bitcoin continues to be on a great run after the election with a crypto-friendly administration coming in. Twilio pulling back and bouncing at the 8-day moving average today. Sprouts tight sideways for 3 days. Atlassian pulled back slightly below the 8-day moving average today. XPO also below the 8-day. NVIDIA below the 21-day, or just barely below it, but something to pay attention to there. They do have earnings in 2 days, and there was a report that they're having some problems cooling the server arrays. The chips are running hot. It's not really their problem. It's just a little bit of a redesign needed to keep the chips cooled. Toast pull back after a very nice move higher after earnings, and finally Palantir with a move up on really what seemed like nothing on Friday, giving a bunch of it back, but bouncing at the 8-day moving average. And that is the 21 over 21 list for today. And with that, I'll wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Got a lot of people reaching out to Ted and Connor, too. They've got a fantastic Twitter presence, put out a lot of content, and a lot of people are contacting them about information with coming on board. So always love to see that. Really happy with the progress that the fellows are making since they joined us right out of college a little more than a year ago. And a reminder, our flagship GROTECTION portfolio is designed with a dual mandate, and that is grow assets during uptrends, protect them during downtrends. Lighten up a little bit if we start to pull back and break the shorter term moving averages, but get the heck out of the way if you break below this black line. That's the 200-day or 40-week moving average. This is where all bear markets occur. Until that, we give the market the benefit of the doubt. And with that, I'll wrap it for Monday, November 18th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.